So my name's David Saunders. I work for a company called Briter. We basically track funding flows into innovation ecosystems across emerging markets. We've been working in Africa for the last 7 years. I used to live in South Africa and Kenya as well, recently relocated to the UK. And this is the second year that we're presenting at this forum. Last year we presented about a similar time. We looked at what we were starting to see in Q1 of 2025, and we'll revisit some of those insights to see what we expected to happen, and then what we've actually seen happen before diving into a data-driven presentation on where the market is today. And I think it's been quite an interesting time, not just for VC in Africa, but VC across the world, because you had this quite big run-up in VC funding when money was cheap, from 2017 to 2022, really peaking from 2019 to 2022. And then we went through quite a big correction, beginning in the second half of 2022, followed into 2023 and 2024. A lot of people call that the funding winter. It wasn't an Africa-specific trend. We saw it across emerging markets. And then last year, we started to see early signs of recovery. And I think what's really interesting about that new wave, that new trajectory that we're on, as well, we're starting to see some signs of recovery. How the market is recovering is very different. So with this very provocative title, what we want to look at really is kind of after the boom and bust. Where are we today, and what can we expect going forward? So me and Dan are going to do this great combination dance here where he is going to click through the slides for me. You can see if it can reach up here. And yeah, at the end of this, I'm also happy to take any questions that you might have, where it can be a nice intimate group here. If there's anything here that really stands out for you, anything you want to unpack further. So when we got up here to present last year and we looked at the data beginning in Q1 2025, there was 4 things that really stood out for us, right? One was we started to see with our own data that perhaps the funding downturn had bottomed out. So we saw a year-over-year decline in funding from 2022 to 2023 to 2024. And Q1 was the first quarter since the second half of 2022 that we saw increases in deals and increasing in funding. The second thing that we saw was fintech was still capturing the majority of funding within the African startup ecosystem, but we saw early signs that climate tech and AI were starting to really establish themselves as niches, not yet on par with fintech, but starting to dethrone the king. The third thing that really stood out for us was, for a long time it was a story about the big 4, fintech, VC, as if Africa was one market. And I think what we started to see last year is in this kind of recovery, we started to see more divergence across what type of sectors were getting funded. And we also saw that divergence increasingly across the big 4. For those of you that don't know the big 4, it's Egypt, Nigeria, Kenya, and South Africa. We'll show you up here that for the last 10 years, they've attracted the majority of funding. Fintech had attracted a lot of funding. Everything had been equity, right? And I think what we've seen in this correction, and as we've seen ourselves coming out of this correction, a lot of those dynamics changing. And then the last piece, because we're in the UK and because we're in London, we looked at UK investors. And we looked at who were the UK investors that were entering the space or had been active in the space. How were they changing? What was the playbook looking like? And at that time, what we really saw, right, was particular corridors that were doing well. South Africa, for example, Nigeria, for example. And we saw particular types of partnerships or types of financing that was doing well. Blended financing, some of the later stage VC. And I think what's been interesting in the last year, as we've looked at this a bit farther, is the type of funders that are entering the space are starting to reflect some of those wider dynamics that we're seeing changing within the marketplace as well. So that was last year's outlook. Where are we today? So we got some things right, and some of the benefit of having timely data. The recovery was underway. We were definitely starting to see the market recover, funding coming back. Lots of people made social media posts at the beginning of this year. The funding winter is over. Hooray, because it was the first year that we saw both funding and deals recover. However, it's been a very uneven recovery. And we'll show you what that means. It's not the same type of market that we saw in 2021 and 2022. The second thing is climate tech was not just an emerging niche. It's now actually leapfrogged fintech as the sector, and climate tech's not really a sector, but the thematic area that is attracting the majority or the most funding within the African ecosystem. And we'll see why that's necessarily the case and the type of financing that's following or driving that trend. The third thing we'll see is that the markets have diverged. What is working in Kenya is different than what's working in Nigeria, what's working in South Africa, what's working in Egypt. And we're also seeing markets outside of the Big Four starting to establish themselves as regional hubs. And I think that's been a very interesting trend as well in terms of how that shaped funding dynamics. So if you were in Nigeria in 2020, 2021, or 2022, you felt that VC boom. You felt those checks coming in, a lot of it coming into fintech. If you've been in Nigeria in the last 3 years, you're wondering where that money is. To a large extent, if you've been in Kenya over the last 3 years, or in 2020 to 2022, you wondered why you weren't getting all the funding Nigeria is getting. In the last 3 years, you've been relocating from Nigeria to Kenya in order to get access to it. So why are we seeing those funding trends starting to shift? Fourth, and I think particularly interesting, is it's not fintech, while it's still a very popular sector in terms of funding, or attractive sector in terms of funding, it's moving from the frenzy phase of, pray and spray, we'll fund anything, into a much stronger consolidation phase. And we'll show you some of the dynamics around that. And then I think, as we're at a UK event, the UK does still remain a key player, despite lots of changes that we're seeing globally, both geopolitically, but also in the local UK landscape as well, and how they relate themselves to opportunity in the African landscape. So we're going to cover all of that. Does that sound good? Okay, what is the data showing us? So the first thing here, as I was saying, is that 2025 was the first year that we saw year-over-year growth in deals and funding volumes since 2021. People debate about how much exactly we saw. Was it 3 billion? Was it 4 billion? But generally, everybody has agreed with the same type of trend. What has been different is what is driving that trend and how is funding being dispersed. So if you actually break that down and you look at from 2019 to 2025 in terms of stages, the only stage that has really held up in terms of price and in terms of activity has actually been Series A. The pre-seed and seed stage has been relatively volatile. I think there's been some years where the median ticket's going up, somewhere it's down, sometimes where deal flow is going up, sometimes where it's going down, and we'll show you now. But what we've really seen over the last year, and I think a big part of what we've seen have driven this growth, has actually been the Series A stage. Not like what we saw previously in the Series A plus stage. A lot of the 2020 to 2022 deals, those were big deals. That was the era of mega deals, $100 million deals, SoftBank type of activity. 50 million is the new $100 million deal. We have seen a 60% drop in the median ticket size from Series A plus deals from 2021 to 2025. So I hope none of you are going to struggle with this, but if we go back, right, we're seeing a depression in ticket prices at the early stage and a depression at ticket stages at the late, we're seeing depression in ticket sizes at the late stage. Really, what's holding up in terms of the sector to a large extent, in terms of driving that funding volume, is Series A. And the fact that while ticket sizes have dropped here, we are seeing more of those deals happening. So 50 million is becoming the new 100 million, but we're seeing more $50 million deals. We're seeing a lot of early stage deals happening below 250K, and we'll show what's driving that. We're seeing, the 10 to $50 million holding up, but where we're really seeing the pressure and the compression is this 250K to $1 million. And if I was to extend this out, it's probably 250K to $2 million. That middle stage, right, where you're just a bit too big to be able to take early stage grants or even early stage, equity, angel checks, for example. You can still do that, or sorry, you're still able to do that, but you're too early for the VC players that are returning to the market. And as VCs have become more selective, more risk off, they're less willing to write these checks. And so we're seeing a lot of early stage startups getting stuck, and we're seeing a lot of late-stage startups which have made it through this valley of death, being able to get repeat deals. So we're seeing this polarization to the early and late stage, with the one caveat that at the late stage, we're seeing lower ticket sizes, but more deals being done. And a big reason that we're seeing this is because of the changing composition in the type of funding. This is deal type. This is not funding volume. So whenever I show this graph, I think that's really important because 36% of funding in Africa's ecosystem are not grants. I'll show you what it is right now. But it's showing you that what's driving a lot of that early stage growth. Remember, more than 50% of deals are now coming from grants. A lot of that has been this growth in grants. What we're seeing here, while marginal from 2020 to 2021, is a doubling in the number of deals that are coming from debt and a continued decline in equity. What you see here, though, is that those 8% of debt deals now make up nearly 40% of the overall funding into Africa's startup ecosystem. When we had our peak in 2021, it was 6%, 94% was equity. So the big shifts we're seeing, right, if you look at this all together, right, is we're seeing a market in recovery. Funding volume going up, deals going up, but we're seeing a polarization largely driven by the type of funding that's now available in the market. Much more early stage grants, much more late stage debt, less equity, squeezing that middle stage to an extent. And a lot of this debt are not these $100 million plus rounds that you saw with private equity and things like that in 2020 and 2022. They're 10, 20, 30, $40 million debt rounds that are coming to help companies, either fintech companies, access financing to scale up their businesses, or we'll see now asset-heavy infrastructure companies like Climate being able to tap into that to scale and grow their businesses. Because as you'll see here, for a long time, the name of the game was digital. It was fintech and DFS. It was e-commerce. Those were really the big things that drove things in that 2019 to 2021 phase, right? But if we look over the last few years, we've seen a shift really away from just software only or digital only, particularly on the back of climate, to more asset-heavy, climate, mobility, logistics types of solutions. And that's obviously being supported by a lot of that debt. That's why I wanted to show you that initially. And a lot of that funding is late stage, scale-up type of funding as well. If you actually look at fintech, if you look at equity, and you look at early stage VC, there's a lot of pressure happening there. If you look at where the funding is going, it's debt, it's asset heavy, it's EVs, it's renewable solar. That's really what we're seeing is driving this recovery and what's driving this increase that we've seen in the funding volumes. And that's why when everybody was saying, the funding winter is over, for who? And I think what has been quite interesting as well is if you look at the capital stack, the type of financing, just comparing climate to fintech, this really stands out. So this is just the share of deals. This isn't the funding volume, right? But you can see that fintech is a much more heavy equity game. There is more debt coming into that, particularly at the later stage. Particularly when you can borrow against, you can basically borrow against your collateral, your equity, your loan books. But climate tech has a very, very different capital stack. And they also have a very different set of funders. If you look at the type of funders that are active in the fintech space, it's the commercial funders, it's the VCs, it's the private equity guys, right? When you look at what we've seen emerging in the climate tech space, again, building up this narrative, we're seeing this recovery. What's driving that recovery? Is it the same game that we saw from 2019 to 2022, or are we seeing that game change? Concessional debt, concessional funders, climate, mobility, logistics. That does not mean that there's not a space for startups within that. If you go and you speak to many of the startups that have, rode off the back of this as well, they're just as innovative, just as breaking the frontier around it, but the capital stack, the financing model for those solutions is changing. You also see this quite interestingly playing out in the dynamics in the big four. So if we look at, this slide right here, and I'm sure you can all see this perfectly with the colors in the sun. By the way, a fantastic venue. What you can see in terms of 2019 to 2021 and down to 2025 is a lot of funding went into Nigeria, right? Fintech, equity, Nigeria. What you've seen is since 2021, a continued decline in funding towards Nigeria. If you see Egypt as well, 2020, 2021, 2022, a lot of fintech, e-commerce, VCs. The markets that have actually been more resilient within the big four, and surprisingly 2025, Kenya was the top funded destination within the African startup ecosystem. They've been able to ride a very different sector composition. So Nigeria, South Africa, Egypt, 50+% fintech. South Africa also has quite a unique environment within the African context in terms of VC, a lot of local funders. You also get a lot more stuff outside of fintech as well. But you see that within Egypt, within Nigeria, a lot of the funding has been in the sectors where we've seen compression, e-commerce and fintech, e-commerce and fintech. When you look at Kenya, for example, a lot of the funding has been in the sectors that they're doing very well in: climate, renewables, mobility, and logistics. So some of the changes that we've seen in terms of the big four dynamics reflect what we're seeing driving the overall funding space today. And I think what's been really exciting is when we actually look outside of the big four, we always talk about them as well, is looking at where funding is starting to disperse outside of those markets too. And we're seeing quite a strong anchoring starting to emerge in West Africa, particularly in Senegal, Ghana, and Cote d'Ivoire. And you're seeing that more and more in terms of their own transitions that they're making, beyond fintech, agriculture, climate, mobility, and logistics as well. And what you're really seeing, right, is less of this, I'm chasing an individual market, where I'm chasing a specific deal or a particular sector, and I'm willing to be less market-driven around that. And a big part of that, right, is because you don't just need to be in the biggest market in Africa to have an investable, bankable business anymore, with the way the capital stack is changing, with the way the funders are changing as well. Is everybody following so far? Is this making sense? Okay, I've got some head nods, looking good. Anthony's giving us a head nod from the corner. Fintech. One of the most interesting parts of the fintech story in 2025 was M&A and exits. 2025 was a record year for exits. Everyone was like, this is great. Liquidity coming back into the marketplace, right? And as you can see, fintech drove a lot of those exits as well. But let's dive into who were the acquirers of those. The majority of those acquirers were other startups. It was a consolidation play. So what you've seen within the fintech space, right, is the markets that really rode off the back of the fintech boom have seen the biggest corrections. Fintech has started to fall below climate tech in terms of its funding. And while we've seen a lot of exits in the fintech space, a lot of the consolidation we've seen, or a lot of the exits have actually been a consolidation scale-up play within the fintech space. And this is a good thing. This is not necessarily a bad thing for the space. This is a very healthy cyclical process, as you go through these kind of expansions and consolidation phases. What's important is not to be dissuaded by fintech's potential, but to be encouraged on what the next sectors are that are starting to follow that same trajectory, and where those could be and where the opportunities around them are. So, some of the key things coming out of that, right, is the way the market has changed. What's driving this, new funding, end of this funding winter? And I think what's really important then is to zoom in for a lot of you in this room is, so how is the funding then landscape changing as well? And we have been through some very interesting disruptions in the last 5 years. I was just saying to Dan that we're not in an era of a once-off disruption. It's a way, we can look at the Iran war, for example, and say, oh, this is a once-off thing. But if you look at the last 5 years, COVID, Russia, Iran, interest rates, we're in a world of constant disruption, constant churn. And I think as a result of that, we've seen some big changes in the funding landscape. While concessional funders have, played a large role in terms of helping to mitigate some of the downturn that we've seen in the funding environment in Africa, and have been pretty resilient, what's been positive in 2025, and I think part of what's helped to bring back some of the funding, has been the return of commercial funders. But they're coming back with a different playbook. It's not all equity anymore. They're thinking differently, and we'll show you who some of the private credit players are that are emerging are. You're also seeing in this world of more disruption the need to have more homegrown funding, more local funding as a way for you to be more resilient across some of the changes that we're seeing globally. Foreign funders can be very fickle. I think one of the reasons we see South Africa's startup ecosystem be more resilient year over year is because they have a lot more access to local funding. They don't have to be as reliant on foreign funding. One of the reasons we saw some more pressure, say perhaps in Nigeria and even in Egypt, is you had a lot of tourist funders that heard about the market, saw it being really big, didn't really understand it. And this isn't a Nigeria issue. Yesterday I gave a presentation on Indonesia. It was the same story. So really building up this kind of local capital base can be more resilient, particularly in a world in which we're seeing more disruption. And this funny accent I have, we've seen the US change its attitudes towards many things in the world over the last year. I won't postulate on politics here, but let's at least agree that things have changed to some degree. And what you've seen is this has both shaped commercial and concessional funding. The VC correction that really began in the US starting in 2022 has meant that deals from US funders in Africa, and this is just the foreign funders, has declined from 3/4 to just over half. The biggest growth we've seen is from the Middle East. It'll be interesting to see how much that stays after the changes that we're seeing or the disruptions we're seeing there. And the biggest growth in commercial funders outside of that since 2022 have been from the UK and the EU. And if we look at concessional funders as well, the UK still remains a core part of that concessional catalytic type of funding that's emerging, but the EU has been really the biggest player, and the shift from USAID, from DFC, has meant that it's a new regime in the US and how you think about it. From them being able to back funds to them being able to do direct deals. And the UK environment is really interesting for this, right? Because it's a mix of this commercial and concessional funders. And I'm sure I'm going to miss some names in this room, so I'm going to apologize beforehand. And actually, funny enough, don't know the UK ecosystem as well as I know the African ecosystem. But what we definitely see is that you have a range of players. This is all from our Briter intelligence database. So these are players that have made deals. These aren't hypothetical people that have said in a conference like this, Africa sounds great, right? These are people that understand the ecosystem and doing deals. You've got early stage to growth stage VCs. You've got private equity players that have been coming in at the later stage. You've got private alternative credit providers, which have been growing a lot. Me and Anthony, where are you from Ghana? He's probably, yeah. We were just looking at some funders that have done deals that'd be relevant for him for fintech, and TLG Capital came up as one that had actually done a number of recent debt deals, for example. And then you've got the DFIs and specialist funds that are helping to unlock a lot of that concessional debt. So the UK has a very kind of broad set of funders and a broad capital stack, which really well positions them for being able to support a wide variety of companies within the African ecosystem. And as we're seeing, that diversity is increasing and the type of financing is increasing as well. So I think that's what I have for today. And I will leave with some bold 2026 predictions, and next year you can come back and hold me accountable to those. Because we didn't get so wrong in 2025, a few things. The first thing is, I think this mid-market is going to continue to get squeezed. Funders are selective, and the instruments that we currently have aren't very good for companies that are in that transition to commercialization scale stage. We need more innovation around it. Otherwise, in 3 or 4 years, we're going to wonder where the pipeline is. Right now, there's enough companies we can do deals, we can get our deal flow through, but that will catch up with us. The second thing is I think blended capital is going to move from a deal approach to a stage approach. We're going to stop trying to optimize for each individual deal, and many companies you'll speak to can say, that one deal is not what really made the difference for me. At some cases, one deal can actually be quite bad because you've given up too much ownership. You've taken on too much equity, too much debt. It's how do you think more strategically about blending this different financing across your growth journey? How do you layer your equity and debt, Anthony, in your guys' case, so that you guys can use equity to unlock more debt to basically scale your financing operations? Sector leadership is going to continue to fragment. It's not a blanket playbook anymore. You really need to think about what your competitive advantage is if you're a market. You can be a Tunisia in AI. You can be, a Ghana in health. You can be a Kenya in climate. You can be a South African fintech. So I think you're going to see less and less this kind of single Pan-African winner in terms of sector dominance. And you're going to see much, much more differentiation emerging. And I think that's a really exciting thing. And I think that comes to my next point is we're not going to be market driven. I'm seeing a big shift away from this. I can't tell you, Kenya attracted the most funding last year. All the funders I'm speaking to are saying, what's outside of Kenya now? Where do I find a good deal? Where do I find a good price? Where are good businesses? It's less about the particular market they're looking at. And then the last piece I'd say is that I think the UK will continue to play a central role, and Anthony will actually get into this as well. So teeing you up here with my fifth point, both as a place for companies to come and register to get different types of support, but more than anything, be able to connect with the funding community here to help them grow and scale their businesses across an increasingly complex market. So with that, thank you very much. I hope it set the scene for today.